everyone, K-Kim here with the Traders Club. Thanks for tuning in today. Today is September 29, 2017, Friday. Welcome to the market update. Again, my name is K-Kim with the Traders Club. Today what we're going to do, we're going to be talking about Spider, Russell, Nasdaq, XLF, the banks. Let's look at let's review a few of the positions I've been updating on my journal post, Citigroup, Intel. Also, I talked about Apple, weekly bearish divergence, some of the concerning signals. We'll kind of revisit that and see what happened today or what's been going on this week. To end this video, we'll look at XLE, the energy sector, and GLD, and we'll call it a night. Hope you had a good week trading thus far. Market is acting well here. Small caps really has been the highlight of the story this week, and so we'll talk about that. We'll follow up on that. So let's look at it here in the Spider, and we've been talking about Spider, and we've been talking about the moving averages. You guys remember my moving average: 20 MA at close, 50 MA at low, and 100 SMA at high settings, right? So we've been talking about these moving averages, and we've been talking about how as long as the price on Spider stays above a rising 20 MA, as you can see right here, the 20 MA, the benefit of the Dow goes to buyers. So you can see that right here. Market got up, came down, right? Where did it find support? You can see, let me zoom in here a little bit. You can see that, got up, came down. We found support at that rising 20 MA. As you can see, that kind of a greenish, bluish line there. Again, that 20 MA's setting at close. So we found support. We found some buyers in that vicinity. We consolidated a little bit of pennant pattern. We break out to the upside with a pretty sizable gap up here. And then we got up and we started consolidating yet again with kind of a pennant pattern, right? We've been talking about this pattern as well in the last week's the market update video. We also talked about as they start to shake and bake, we have this bullish pennant pattern. You know, bullish pennant pattern, it can break on either direction. In the textbook, it says it breaks, it's a bullish pattern, but I've seen that, the bullish pennant pattern that failed. You can see that that was a bullish pennant pattern that failed, right? So talked about how it had a 45 chance, 55% chance it could break higher, 45% chance it could break lower. Well, this time it break higher, you can see. And then we did see a little bit of false breakdown, you can see that. But again, when we do have this bullish pennant pattern, when we do see intraday breakdown, what's the level you want to look at? It's the rising 20 MA, as you can see here, right? So you can see that rising 20 MA, and again, what do we say? The benefit of the Dow goes to buyers as long as we stay above it. And when you break below, or when it was breaking, or it was seeing that false breakdown on that pennant, see that the 20 MA was still rising. We saw dip buyers coming in yet again. There's the same buyers that we saw buyers here, buyers there. So sentiment is definitely bullish as of today in the minor term. Obviously bullish in the intermediate term, bullish in a primary term. We've been talking about that. We don't have to talk about that now. But in the minor term, obviously sentiment is bullish. Sentiment was bearish here as the 20 MA was declining in the minor term. And then as we got back up, that 20 MA is finally starting to get back up, supporting the bulls. Any dips were bought. And you can see that we formed that, the pennant. We broke out, a little bit of volatility. Is it a head fake? Is it really going to happen? And then yesterday we saw a pretty solid candle there with slight gap down at open. We saw the buyers coming back up, and today open flat, a little bit of volatility this morning. And you can see closing the week, closing the month, pretty solid bullish note here. So I won't be surprised to see some shenanigan next week, maybe a gap. I'm not calling it, but when things seems to be like so smooth and everything seems to be working so great, like we had that kind of a bullish pennant pattern here too. Also, when things seems to work just so in orderly manner. And then you can see we're ending the week in a positive note, and we're ending the month in a positive note. If you look at a monthly chart, it just, very, very bullish signal, obviously in the long term. So I'm not calling this, and you know, I don't really care for it, but there's a possibility we may see a gap down or some kind of shenanigan here potentially come retest it. So if that happens, I wouldn't be surprised to see that, and just letting you guys know that that's a possibility, because everything seemed to be such an older fashion. Again, when everything is in older fashion, market do not like that, not one bit. So I won't be surprised to see that. But if we don't see that, and if we see continuation to the upside, then what I would look at is this rising channel, right? We've been talking about this rising channel for some time now. So I think this rising channel is going to be a crucial, pivotal level that that you want to pay attention to. Once we break out above it, sooner or later we will. But we're probably going to get up here and we're going to fizzle, and we're going to see how it's going to play with that. Either we break above it, we gap up above it when we get there, or get to my next target at 255 and then start fizzling. You know, and I've been talking about how I think it's possible that we can get to 255, 260. And we've been talking about this when the market was shaky. So it's not like we're just talking about it, because it's so easy. When everything's moving like this, when the market is making all-time high, when the market is breaking out, when the Russell, think about it. How many people were talking about bullish when the market was down here? How many people were talking about small caps mid-August last month? It's easy to pump out articles now and saying that Russell 2000 is bullish. It's hard to say that Russell 2000 is bullish last month, mid-August, right? So anyway, so right now it's just everybody's, again, market don't like that. Market don't like when everybody talks like they figured it out. And so I won't be surprised to see some shenanigan next week, but we'll see. And if it doesn't, it's great. So this is a level to watch. Falling resist or the rising channel, and you know, likely another scenario could possibly we get up here, fizzle, and just gaps it up, and then we see another kind of a bullish move, get to about 255, pull back, retest, and then get to 259, and then I think there could be one last shakeout or correction before the year-end move, maybe kind of a more steeper correction of move. Positive boom, 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 correction, a move, and then the final December, end of December rally or something like that. I know I'm getting too ahead of myself, but that's kind of what I'm expecting here in the intermediate term. So let's see how that plays out. Again, as of today, man, the trend is up, the sentiment is bullish in all terms, minor term bullish, intermediate term bullish, and a primary term bullish. And at this point, any pullback would be opportunity to buy the dip. So let's see, and again, let's see how that deal, how we deal with this level going into the next one. We'll follow up. Market is closing here, so we're seeing more rapid flashing lights on your left. And Russell 2000 here, the IWM, this has been the star index. This pretty much since August here, September, all throughout, pretty much V-shaped higher. This is exactly what I was expecting to see, when the market, again, it's easy to say that we're bullish here. Obviously, we're bullish. We have broken out. Monthly chart looks great. Weekly chart, great. But as a trader, like ourselves, it's easier to call things. But the real problem is, what would you do when you were actually had position in that vicinity, buying these dips? What would you do when market comes down, break new lows? See, that's something that nobody talks about in the market. Who talks about that in Twitter and stock tweets, or who talks about it in writing their blogs? Nobody. It's always easier to pump out articles and saying that, yep, this is bullish, yep, we're making new old timers, yep, Spider doing great, yep. It's easy to say that, but that doesn't really help anybody, and it doesn't help you either. What really helps you is to cultivate a skill that, well, if I was long on Russell 2000, maybe with some long-term calls, and when things start breaking down like this, well, what's your strategy? Do you exit and take a loss trying to get back in, or do you hold through? That's always the most challenging question that you should be asking yourself. That's why I write journal articles to let you see what my thoughts are when the things are not going so great. You know, it's funny how it appears in a social media world. It's like every trader, everybody is doing so great, and they're always having perfect trades, and it's always working perfectly, right? But the reality is, that's not how it works in the market. You know, not everything's always pretty. You know, not all trades are gonna go as it's planned. So when the trade that you planned and executed, when that trade is going against your plan, when it starts to shake and bake, what is your decision? See, that is the hardest question you should be asking yourself, and cultivating that skill to figure out, well, in this situation I should be holding. Well, in this situation I should take some off. In this situation I should just exit and take a loss. That is the hardest question. That is the most important, challenging skill set that as a trader that we should all learn. Yet everybody loves to talk about, yeah, we're all-time high, yeah, it's bullish, yeah, I called it, but yet nobody likes to share. So, I always like to tell truth to traders and people who follow, and that's why I write journals, so that you know on a daily basis, not daily, I don't write it every day, but at least a couple times a week or so, let you guys know what my thoughts are and things like that. But Russell 2000, you guys know that I've been pretty much buying the dips all year long. And it gave me the ultimatum right here. It just pulled, and it's all, if you're just watching this, I'm not just saying this now, it's all documented. If you go to my blog, twotradersclub.com, journal IWM calls. I've been updating my journal since March, because this is where I've been accumulating positions. And then this thing finally pulled back, kind of gave me that it just tanked and plunged, and I bought this dip right here, and then gave me a new low, in which I wrote an article in my IWM analysis article, where I talked about there's a chance that it could get slightly below the 200 SMA, kind of shake people out, fake everybody out, where it could give you that bear trap and then going higher. And I'm not reiterating all this just to let you know that I called it. I told you I could have been flat out wrong. I decided to hold it. I could have lost all my money, right? And sometimes that's what it takes to be a successful trader, is that sometimes you gotta make some bold calls. You can't always chicken out, and people always say you can always go back, and you can't. On Russell 2000 trade, you couldn't have gotten back in. How? Where is the entry? So let's say you got out here. Let's say you got out of here. When do you get back in? Do you get back in on this gap? It's been going straight up. How do you know? How do you know if that's gonna go up and then get up and hit this resistance level here, maybe around 100 SMA, and then pull back, and start doing something like that? See, the V-shaped move, something like this, it is the hardest reversal to get into, because it doesn't give you any setup or pattern. So everybody thinking that we're still in this channel, you know what I mean? Like, it's been really... So what happened was, really, the Russell 2000 really conditioned traders to be fearful. And then when everybody's fearful, and everybody's exasperated, and everybody's sick and tired of this index, I even heard some traders saying that this is garbage, I'm getting the hell out of it, I'm going to focus on something else. When that happens, remember what I said, the market does not like that when you think you figured this out. So then when all the participants on the Russell 2000 getting the hell out of it, just sick and tired of this chop, so many traders trying to time the breakout, they got chopped to death. So many traders, maybe were patient enough until the shenanigan happened and finally couldn't handle it anymore. Something that I always talk about is that, especially to my members, is that the market knows how to test your patience, test your limit. When you feel like it's a last draw, like you cannot hold anymore, that's when the market tends to bottom. It's crazy, but that's how the market works, right? And it's master at it. It's a master deceiver. I talk so much about, even on my last my lesson, free lesson video, I talked about the deception of trend lines and head fakes and, you know, bear trap, bull trap, all that stuff, because that kind of stuff happens all the time. Just because they clear you know, resistance or support doesn't mean that it's going to work out. How many times, look at new cleared the resistance, didn't work out. New all-time high, didn't work out. New all-time high, didn't work out. And how did you know that at this time it was going to work out? You see what I mean? So again, it's always easy to act like you're, you know, you got it, you know what you're doing, and just shouting that Russell 2000 is bullish. But what were you saying when the Russell 2000 down here back in August? What were you saying? What was your thought? Were you still standing strong in your analysis, saying that, hey, we're still in a bullish term, you know, primary term uptrend, this is a consolidation pattern, this shenanigan do happen, could be a bear trap, or do you hold through it, or do you get scared and get out? That is the biggest question you should be asking yourself as a trader, not just calling things like, yeah, you know, we got this thing breaking down, Russell 2000 going to 120, and then up here, Russell to 155. That doesn't help nobody. And I just say that because it seems like that's what everybody wants to talk about now, like Russell 2000, Russell 2000. But the most important part was when the market shake and bake. What you're gonna do with your position, right? That's the biggest question we should be asking ourselves. But anyway, so Russell 2000 obviously made new all-time high, weekly, monthly, just breaking out. And we talked about how I think, you know, my market update back in mid-September that it could potentially go straight up, and it's because it has already conditioned all the traders to get the hell out of this small caps, and they're just scale the hell out of it. Now it is ready. Now it is ready. Now it is preparing for a run. And again, I've been targeting 155, 162 since March, and I'm still holding everything, and I'm willing to hold through to 155 before unloading position. There's a possibility, there's a gap here. There's a possibility maybe a pullback. And so if we do see a pullback, I want to see 144, 145-ish to hold. Let's see how that plays out, but sentiment is bullish as of today. Nasdaq Qs, whatever happened to my... Excuse me. Okay, so Nasdaq, we've been talking about falling wedge here, and we've been talking about how last couple weeks that everybody's talking about this, and the market does not like that when everybody talks about it, like, you know, you figured that out. So it's not going to be easy to just predict the outcome of this falling, or not falling, a rising wedge. Rising wedge in textbook, it is shown as, it is written as it is a bearish pattern that it tends to break to the downside. However, like I said, I've seen it that it breaks out to the upside. I've also seen it where it looks like it's going to break to the low, to the downside, and then fakes everybody and goes up to the upside. Shenanigan like that can happen because we're still in a primary uptrend. However, I do think that sooner or later Nasdaq is going to retest the 200 SMA. You know, Russell 2000 has retested 200 SMA. The transport has retested 200 SMA. Bank sector has retested 200 SMA. But the Nasdaq and the Spider and the Diamond, the Dow Jones, has not yet retested 200 SMA. I think Spider and Diamond probably not going to test 200 SMA this year. Possibly next year we'll cross the bridge when it comes to it. But the Nasdaq, though, if we do break lower, and I'm not calling it as of now, but if we do break lower to the downside on the Nasdaq, then I think its likely place is going to 200 SMA. So let's watch out for that and see how that plays out. Let's go to banks. Banks doing well here. We just remove that. New, not new all-time high, but new highs here. We got this gap here. As long as we can sustain this gap. Let's see here. This is a gap up point. Let me draw that again. Let me move that up. Yeah, so as long as 25.68, 25.39, as long as if we can sustain this gap, or this gap remains open, I think the minor term sentiment is bullish. Is this exhaustion gap? It's tough to say. I mean, we did have a breakaway gap, a little bit of continuation gap. Is this another continuation gap, or is it exhaustion gap? Again, I don't know at this point. Only way I would know is if we get filled and then comes back down to 24.62. The only problem would be if he gaps down below 25.39, then that would be considered as an island reversal. That would make things hectic for the buyer. Doesn't mean the whole trend is going to be dismantled or anything like that. It's just going to be very hectic for maybe a month or so if you do see island reversal. But looks like we're seeing a bit of a move here. See, so as of today, trend is up, and so let's see how it plays out here. 20 MA is down here. So we haven't tested 20 MA. Last time 20 MA, when it did come back down to 20 MA, it did act as support quite some time. So if let's say if this thing continues higher, goes up, and then if we start to pull back, then 20 MA is likely a place that we're gonna find some support. Let's continue on here. Citigroup is also holding up well here. I did close 1/3 from the remaining position. So this was when I started buying the dips here. It's all documented in my journal post. Closed the one. Where did I close? Closed 1/3 from the original position, holding position, and then I closed another 1/3 from the remaining. Not like 1/3, 1/3, 1/3. I mean, like I closed 1/3, and then whatever the remaining, close 1/3. So I'm still holding pretty sizable position here. My next target is 75. 20 MA is still rising, and so we got this gap up again. Same scenario here as the XLF. As long as we can keep this gap open, I think we can get to, we're just a few points here. Can get to 75. We don't want to see a gap down here below the 70, 79. That would make an island reversal. Then that's going to create more of a hectic environment for Citigroup. But looking great here. Weekly looks good. I mean, let me actually, as I look at my weekly chart, there's more room to move. On the daily, there's also more room to move. So let's see how that plays out at Intel. I have been very pleased to see how Intel's been playing out. My recent article on Intel, I talked about how we were bound by this downtrend resistance or channel. What we didn't want to see, though, looking at this fluctuations, see, what we didn't want to see when this thing got up, we didn't want to see, for the buyers and myself, didn't want to see this thing coming back down to the channel. Well, then that would make this downtrend channel to be valid and to continue to the downside, and this downtrend to continue, right? What we wanted to see is that we wanted to see this thing stopping short around 35-ish level, and this is what I explained it on my last article. Intel set to soar part 4, I think. Just my last Intel article talked about how when it does pull back, I want to see this thing holding 35-ish level to create a higher low, and in that process, cultivating potentially inverted head and shoulder pattern, right? We got the left shoulder, head, right shoulder, and then breaking above 36.64. And so we came down, got up, broke above it. Now what happened was we're no longer bound by this falling channel resistance. Can you see that? We're not in a downtrend anymore. What happened was we have cultivated higher high for the first time since this falling channel has been established. Not only we have nullified this falling channel resistance, we have broken above it, and we have also cultivated another higher high. Now back at these highs, these pivotal levels here, and this is a level that there's lots of overhead supply. People are getting, a lot of investors may be a little bit edgy or jittery here or nervous because this was a prior resistance. But I do think because of what Intel has gone through and came out of it and it still has a lot of momentum, I think there's a chance we'll break out of it. There's a chance where there's a few possible potential scenarios to pull back, retest some of these levels, 36, 37 before going higher, or we just gap up or just plow right through it. My next target, I think I'm targeting about 42 or so if this thing should break out. Doesn't mean it's going to go straight up. We could see a pullback and continue higher like that. But Intel, as I look at even monthly chart and weekly chart, starting to look really, really good here. So maybe I'll write a follow-up analysis article maybe next week or week after. Once we break out of these levels, let's see how it plays out here. But so far, so good. Apple, we've been talking about Apple weekly bullish bearish divergence. This has happened before here. This is pretty much the monster that demolished Apple stock back in 2012, right? September, right? Lost 50% of its stock value back in 2012. And then we saw something similar. It wasn't really like a well-defined bearish divergence, but definitely the sentiment was there. We have something similar. This was a much stronger bearish divergence though, back in 2012. But today we have not as potent as back in 2012. But we do have that bearish divergence. So if this thing actually finally plays out, this thing could come all the way back down to the bottom of this band. And you can see stochastic has not been back at this bottom band for some time now, since it bottomed here and here, right? So definitely we have some kind of a cautionary signal here. As far as the price action is concerned, let me do some maintenance here. As far as the daily price action is concerned, we're still holding certain levels. We're still in this kind of a higher high, higher low vicinity. So if for I've seen these patterns gets nullified, meaning there's no for this pattern to get nullified, probably it's gonna slowly grind, and it could continue to make these kind of grindy higher lows and higher. So kind of like a rising channel type of pattern, maybe like something you saw on Russell 2000. And if we can see something like that, maybe it consolidate before going higher. But if we start to see heavy selling, maybe come down to 200 SMA and then bounce, and then comes back up to about 153, and then we get rejected, then we have this much bigger problem where we have a head and shoulder formation, and then this thing coming back possibly to about 127 or so. Let me mark these. And we do have, let's see, prior all-time high there at what is that, at 133-ish. So some of those, if we do have a head and shoulder pattern formation, those are the levels to kind of look at, possibly to buy the dip. I think what a lot of people are looking at this as Apple monthly is this too also. This is the monthly chart. That monthly chart looks like potentially we're running into this rising channel resistance, right? And I think a lot of people are possibly thinking this may come all the way back down. I'm kind of leaning towards not coming all the way back down, possibly stopping short in the middle before going back up to retest. We may not come all the way down here. As of today, it's kind of hard to tell how it's going to play out. But only thing we get to work with as of now is this bearish divergence, starting to initially confirm on these, oscillator. But we are not seeing for the price action to confirm. We want to see this price action getting below probably 140-ish or something like that. I think it's gonna possibly come down and retest 200 SMA sooner or later. Last time Apple retested 200 SMA was like November 2016. We haven't retested it yet, so I think this is probably getting ready to retest 200 SMA. Probably gonna find some buyers in that vicinity, probably short-term buyers. The problem will be then, well, when we do see a buyers, is it gonna be a bounce that it could make new all-time high, or is it going to be a bounce for short term and then reverse back down, cultivating much bigger reversal pattern, which is head and shoulder formation? So we'll follow up, and if I see something happening here, then I will write an article or something like that. But that's all we got so far here. XLE, what I do want to talk about XLE is that monthly chart we are seeing. We're seeing some good looking monthly kind of a bullish engulfing candle there. There's finalized candle, right? Because again, that's a monthly chart. So today is the last day for the month of September before October trading coming into next week there. So looking good here. We're running into 200 SMA though, potentially a pullback. It's also possible we just could move higher and then pull back later. Sooner or later pullback is going to happen. But so far so good there. GLD is finally, we've been talking about this level for some time now, right? This falling falling resistance, a primary term resistance. That's a good sign. And then we got up, and then we found some resistance here. We're pulling back here. So when I do a little bit of fib here, measuring here to here, we're retesting 50. So maybe this is a level. This is where you can see the 100 SMA is residing. So maybe this is a vicinity we may find support. Otherwise, we do have a gap fill area that is coinciding with what? The 61.8% retracement. Also, the 200 SMA is probably in that vicinity. So I think we may find bounce here in that vicinity. I think this is going to be act as strong support because we are cultivating kind of an intermediate to primary term uptrend slowly, as you can see right here. We got the higher highs, and we got the low, higher low, and potentially this is higher low before going higher. So gold is starting to see some light. I know silver and GDX is starting to kind of lag a little bit, but gold is working, seeing some positive signs there. So that's everything for me. Well, have a wonderful weekend and good luck trading next week.